Hi everyone, welcome to today's video. So take a look at this graphic and what you will see is that this outlines the winners and losers of 2022 in the Indian stock market. Many of these stocks have made the new all-time high and many of these stocks have been badly crushed. So a natural question comes that are 2022 winners going to be winners in 2023 and should I buy them, or if I'm holding these stocks should I be selling them right now? So this is the first piece of conversation that we are going to have. An alternate strategy that you might have is that, okay, Akshat has shown me the list of losers. I will probably go and buy these deeply discounted stocks, continue to hold it, and I will make crazy money. So which strategy do you think is better? Should you be buying 2022 winners right now? Or should you be buying 2023 losers right now? Let me know in the comment box. On this video, what I'm going to do is that I'm going to analyze the 2022 winners list and give my very clear commentary whether or not I'm building positions, cutting positions. So with that spirit, let us kickstart our conversation. And also many of you, as a part of your New Year resolution, might be looking to learn something new. So I would encourage you to go and check out my stock market course. It's a 360-degree course on stock market investing. I teach about economics, finance, stock markets, technical analysis, fundamental and business analysis all combined, and how it relates to the stock market. So you can find the link in the description box. So a special offer is being going right now. Now, many of you might think that, hey, it's another course. What's big deal about this? Well, the big deal about this is that I have deliberately designed it to improve the completion rate. So there is a community angle to it. There is a specific app that we have designed. So through that, I engage with my students. So not only you learn about the core components about the stock market, but through the community app, you keep on learning about the new updates that are happening in the stock market on everyday basis. So do go and check it out. And with that said, let's kickstart our conversation. So the first stock on our list is the Adani Enterprise. Now this has given a massive gain over the last 1 year, no doubt about that. I had already made a separate video on Adani Group stocks, so I will keep this part of our conversation really brief. The first thing that you need to notice about the Adani Enterprise stock is that how rapidly it has grown and whether or not those valuations make sense. So for this, you can go on the pricing chart of Adani Enterprise. What you would notice is that 5-year gains has been roughly 1900%. So even if you take like a simple average, divide 2000 by 5, that is almost 400% return on everyday basis. So this looks like very promising. But a very quick note about the stock market is that, see, that right now you are making a decision to invest in Adani Group stocks here. So whatever new money, so let's say that you are putting 1 lakh rupee right now, this previous gain history has nothing to do with it. Whatever money you will make in the stock market, that depends on the future of a particular stock. Now, just because some company is giving you 400% returns on per year basis does not make it necessarily good or bad. This is a very, very important point, because think about it this way, that when mutual fund agents come to your house to make you invest in mutual funds, how do you make decisions? Most of us make the decision that, bhai, this mutual fund has given like crazy return, 20% CAGR every single year for the last 4-5 years. Therefore, it's a good mutual fund. Therefore, I'll invest my money in it now. It is pretty much pointless. So the simple question that you need to answer is that, okay, great, Adani Enterprise has given massive returns over the last 5 years, but what does the future look like? Do you see Adani Enterprise stocks giving crazy amount of return in the next year or in the next few years? So let us quickly see how Adani Enterprise has been performing recently. So 1 year return has been 125, because this is definitely a winner stock. What about last 6 months? Okay, most of this gain has come in the last 6 months. What about 1 month return? It's minus 1.5%. So where do I see Adani stocks going in 2023? So, well, the worst case scenario could be anything, or the best case scenario could be anything. But a realistic number that I see Adani stocks hitting is definitely this. This is where I see Adani stocks are going to fall. Why am I saying it? It's very simple, and I've explained the entire logic on the Adani debt video. But let me quickly recap it for new viewers. While there are many things at play, let me speak about the most critical issue, which centers around debt. So ask anyone and ask them a simple question, that why did Adani Enterprise grew so fast? The answer lies simply in debt, that it took too much debt and it was able to use that debt effectively, non-effectively, that depends on you, and they were able to accelerate growth. So it was a debt fueled growth. No one is going to disagree with you on this front. Now in 2023, 2024, debt has become expensive. What do I mean by that? That in 2020, 2021, debt was inexpensive. Can I give you data? Yes. Please check the interest rate data. The interest rates were very low in the economy, therefore taking debt was less expensive. You might have noticed that at the time of taking home loans. For example, if you took home loan in December of 2020, you would have gotten that rate at 6-7%. Right now, try taking that same home loan. You will get at around 9-9.5%. So that is how expensive debt has become. Now in 2023, 2024, interest rates are going to peak and then they are going to slowly come down. But that's a fairly long period for a company that depends so much on capital expenditure to fuel its growth. And that is the reason why Adani ji is looking to do an FPO. There is a separate video that I have made. Please go and watch it. You will get better understanding of this concept. Final point is around debt repayment. Now, because debt is expensive and Adani's would have to repay a lot of this debt, it becomes like a slight problem for them. So from that perspective, if market become even a little bit softer in 2023, and it is expected that in 2023 there will be a lot of volatility, there is a very good chance that Adani stocks will fall to this consolidation level. Now this is my prognosis. I can of course be right or wrong, and every investor is entitled to their opinion, and I'm giving you mine. Now whether you want to buy it, not buy it, the final call remains with you, but do let me know what do you plan to do. Now just to contextualize this conversation in form of numbers, I will show you 3 specific graphics. So the first graphic is that you can see that the PE ratio of Adani compared to its peers is fairly high. It's a lot higher compared to any other competitor firm. Point number 2, take a look at this graphic and you will see that 29% of profits that Adani Enterprises makes, it makes through sale of solar. Unfortunately, as per graphic number 3, this sale of solar is coming down, and as a result, there is a very good likelihood that Adani stocks are going to correct. The second stock that we are going to speak about is Hindustan Aeronautics Limited. So let me first and foremost show you the stock price growth in the last 1.5, 2 years. So if you study HAL's performance over the last 2 years, it has given a 322% return. This is a substantial return, and you will say and make the same argument as I was making about Adani's, that hey, probably it is hyper overvalued. But if you study the entire history, number 1, you will notice that this company recently IPO'd. It's not a very old IPO. This is point 1. And point 2, as per the pricing history, what you will notice is that from its inception, it has given 130% return. And when was this? This was approximately 2018. So almost 4.5-year-old data, in fact 5 years. So it's not like crazy return, 132% in last 5 years. So just to set some context, if you take a look at Hindustan Unilever, if you take a look at HDFC Bank, if you take a look at Nestle, and just look at their 5-year returns, you will say that, hey, these are at reasonable numbers. For example, Hindustan Unilever would have given almost 90 to 100% return in the last 5 years. That is a decent, sustainable return for a consistent compounder. Yes, the numbers can go on and off, sometimes very, very high, but sometimes some companies start to give like 8,000% return or 15,000% return. Then you really need to take a look at if the business model has fundamentally changed. So to cut the long story short, Hindustan Aeronautics is not at a crazy level. Point number 2 that you need to remember about the firm is the nature of work it does. For people who have not read about Hindustan Aeronautics Limited, so they are into defense contracting, so to say. So they manufacture aircrafts and they are into repair of aircrafts as well. This is a primarily government-owned entity, government-owned business. If tomorrow they stop getting contracts, then the business will fall apart. Point number 3 is the order book. So order book simply means that how much order they have been given. Because this type of a business has a fairly long supply chain. Long supply chain means that today they will get an order that, okay, build like 500 aircrafts for us. So it will take them like 3-4 years to do it. So they adopt something called as the order book concept. And right now their order book looks healthy. And that is one of the reasons why this stock has given massive run up over the last 2 years. Now, the most important thing that you need to remember about the business is that this is a very seasonal business and it's a slow growth business. For example, if you take a look at the sales growth of the company, it will hardly come out to be 5 to 6%. So this is not a type of a stock that you buy and forget and you don't monitor. These type of stocks you predominantly buy usually when they are trading very low. Right now, the stock is trading very high. So the risk for me goes up. So therefore, I will not be entering this stock. At one point in time, I had this stock sometime last year. I sold it off, but I have no plans of re-entering it as of now. Now, why am I saying it? Let me complete the thought process by taking you to investor holding. So fundamentally, this is not a bad stock because FII, DIIs are maintaining their holding. No problem there. But the total float of the company is very less. Why is that? Because the president of India holds like 75% of the company. So he'll not go to like Zerodha and start trading his stock to make like little profit. So that is not going to happen. So the number of outstanding shares are very low. So the share price can go to any point. It can fall to any point. These type of companies are very hard to predict. But this is not a fundamental buy according to me, and therefore I'm not buying it. But if you want to do a little bit of puntering, gambling, then it is completely fine to hold it because of the fact that the float is very low. the stock price can jump up and down quite aggressive. Now the third stock on our list is Coal India Limited. Now I had this stock and last year I sold it. Now this type of information, when I am selling it, when I am buying it, etc., this will be a part of the Wisdom Hatch community and it comes along with the course. But back to topic here, if you notice that at what rate the stock price has gone up, so the stock gave approximately 135% return last year because there was energy crisis. The coal prices also went up, oil prices also went up. It was a commodity cycle at play. So almost all the commodity stocks did well. Is Coal India going to do well next year? I don't think that it is going to do that well because the prominent range for this stock is somewhere around here. It has already reached that level. This was a growth phase of the stock. It made some sense to buy it over here. But going forward, what I typically see it happening from a fundamental viewpoint is that it will move like this. Maybe it will go a little bit up, but this is the range where it currently is, unless it is changing fundamentally its business model or somehow generating more sales. So final piece of the puzzle is that let's look at the sales data and let's try to quickly estimate at what rate is it increasing its sales. So if you study the entire sales history of Coal India, what you would notice is that, okay, in 2015, it was somewhere around 74,000. By 2020, it went to 96. So this is not like a massive growth. Then in another 2 years, it added maybe like another 10,000 crores in sales. Are these great numbers? No, because if you compute the compounded average of sales, it will not come out to be more than 4-5%. So probably it is better to just simply do FD. Now with these type of stocks, it only makes sense to build your position if you are getting them at a discounted rate. If you're not getting it at a discounted rate, then you're taking too much risk by buying such stocks. Okay, so the fourth stock that we will speak about is ITC. This has been one of my favorite stocks. I have made a lot of videos on it. I have made a lot of money on ITC. I unfortunately or fortunately sold it last year on huge profits. So I had built bulk position at around 200 level and I was able to get an exit at around 275, 280 levels. A lot of people would say that, you know what, Akshat, it is trading at above 300 now. No one can guess the absolute top of a stock or absolute bottom of a stock. So whenever I have made reasonable profit from a certain stock, and if I feel that a run-up has happened on that stock, I would typically sell it. So let me very quickly talk about the pricing history of ITC and then speak about whether or not it makes sense to build more positions in ITC in the year 2023. So what you would notice is that this is where the run-up had happened for ITC, that almost from here all the way it went up by 116%. So from COVID times, it has gone up by approximately 116%, which is decent enough gain. But majority of this gain has come from this part, right? So from February of 2022 up until now. A couple of important points about pricing. Number one, the stock has started to come down. So it has come down by roughly 10.5% already. So this is point one. Point two is that one could argue that a fair range for this ITC stock, if the fundamentals do not change, is this, because this was a major consolidation period for ITC. So if the fall continues, then you can definitely see this stock going on and trading something like this. So now comes the natural question that, hey, will the stock come down? Will it be trading at these same levels? Because then I will buy it here. Should I be doing it? Should I not be doing it? Well, the answer depends on fundamentals. And for this, you need to understand where ITC is currently making money and what are the challenges. So for this, just go and study the product-wise data of ITC and you will see some very interesting figures. So let me break down these figures for you. So their FMCG cigarette business is not growing. So you can see that the numbers have barely grown from 2018 onwards. On top of that, just before budget, it is always expected that the government is going to introduce more taxation on cigarettes and ITC will get messed up. So this business is looking a little bit stagnated for ITC, and that was one of the prominent reasons why ITC's stock price did not grow for a substantial period of time. Now, where is ITC's growth coming from and why one should be bullish on ITC? So there are two good news. So one is that the agri business is ramping up. So they have clearly been able to double its sales over the last 4-5 years, which is very good. So doubling sales for a big company, nothing like it. So this product category works for them. What about FMCG outside cigarette? Again, this category is growing, no doubt about that. It is not doubling in size, but this is a fairly substantial category because here ITC has a lot of competition from other established players like Hindustan Unilever and bunch of other companies. But with time, there is no reason why ITC cannot eat into HUL's market share, and they will do it. They will create disruption for all these other FMCG companies. So this space is highly saturated, But these are two growing areas for ITC. So if you are betting on ITC's business, you are typically betting on this rather than this. So please remember that. So in 2023, you need to ask yourself the question that will ITC grow its agri-business share and FMCG share? If the answer is yes, then it's a good time to aggregate and build position on ITC. At what point in time I will aggregate more positions on ITC? I will reveal my answer on member community tab, but I hope you got the picture where ITC currently stands and how is it that you need to think about it. Now comes the next stock, which is Mahindra and Mahindra. This is a very interesting snippet for me also because I was not expecting automobile companies to grow really fast, but Mahindra and Mahindra has been able to generate that sales because last year has been bad for Maruti, even for Tata Motors. They haven't done really well in the last 1 year. So M&M is a very surprising find. So just to help you understand the stock pricing context around it, so take a look at it from here, and there has been a substantial growth. So it was trading at approximately 826 on April, and then it gave a massive run up over the last 6 months. So the natural question comes that, hey, why has this run up happened? What exactly is Mahindra doing? It's a detailed video that I'll make, but what they are simply doing is that they are segmenting their business line. For example, Mahindra and Mahindra Financial has come up. According to me, that is a much better bet. So if you take a look at segment wise number, this is what you will find, that the automotive business is stagnating. It has hardly grown. So calling Mahindra and Mahindra as an automotive business, you're not betting on this stock anymore from its automobile business viewpoint. Other things what they have done is that you can go and check it out where they are making money. And what they have started now is Mahindra and Mahindra Financials. And there the business is doing fairly okay. So you can see that from 2017 all the way till 2020, they have been able to generate almost 40% growth, which is not a bad matrix to begin with. Now going forward, the finance industry is likely to do well. All the companies are focusing on India's fintech, will benefit from it. More companies are launching credit card, debit card, banking facilities. So a lot of powerful stuff can come from M&M Financials. Now, if you ask me that, okay, I want to still build my position on Mahindra and Mahindra core business, at what point should I be doing it? Then honestly, I don't know. I would recommend that you wait a little bit, see where this particular stock consolidates. So right now it looks like that it is consolidating here, but it might very well happen that with the next market correction, it can fall in this range, right? So I would say that a good aggregation zone would be somewhere between here and here. So that is what I would say on Mahindra and Mahindra. So now comes the final stock, which is Bank of Baroda. I have been speaking very positively about PSU stocks. I've aggregated quite a bit of number of stocks in PSU domain. I am holding a lot of PSU stocks as of now, but I have sold Bank of Baroda. And here is why, and the equation is fairly simple for me. So right now what you would see is that the current price is here and book value is here. Now, if you go and check and do the same exercise for PNB, the book value is less than its current market price. So there is some gain to be made. You need to understand that PSU gave a run up simply because the Indian banking system got cleaned up somewhere around 2016-17. These banks started to generate revenues and profits. And let me show that to you. So for example, if you check revenues, there has been a very clear growth here. So till 2018, bank cleanup got completed. And from 2018 onwards, a run-up had happened. This also reflected in their net profits. So one massive round of growth has already happened in PSU banks. So since Bank of Baroda has reached its potential in terms of maximum value it could have given me, I had decided to sell it. Can it go further? Absolutely. Will I miss out on the rally? I don't think so, because my money is still with some PSU banks. So if Bank of Baroda runs up from this point of view, I'm quite confident that even Punjab National Bank will run up. So it's not as if that I've cut my entire position on PSU stocks. I'm just selectively picking a few. Final point that you need to remember is that if you want a buy and forget stock, HDFC Bank is fairly good, and last 6 month performance also proves it. The stock price is rising, and I have been a big believer in the HDFC Bank story, and I've been aggregating it quite aggressively. So in 2023, if you're looking to just flip the stock and make a lot of money from PSU banks, then I don't think that that strategy is going to work out. If you want to do some fundamental purchases, then rather go with HDFC banks and rather conventional banks. There your chances of making more money would be higher. I hope you enjoyed this brief conversation. Do let me know what you're buying and selling. And also please check out my stock market course. The link is in the description and comment box.